So here we have all our panelists. Joe from Crown is not very well, so he's not going to be joining us. But we have this smorgasbord of speakers right here, all crammed together like sardines. So I hope they get nice and friendly. So I've had a whole bunch of questions submitted to me by Twitter, by Facebook, by YouTube, and I've written some of the questions myself. If we run out, then I'll throw it out there, all right? So I'm going to do this game show style. So I'll appoint each of the speakers in a row and ask them to pick one of the categories, and then I'll give them a question from that category. That just means that, they don't have to answer a question they don't have any expertise in, right? So the categories that I've written are purpose is the first one, which is like, why are we doing all this in the first place? Adoption, we have security and privacy, economics, regulation and the law, and technology. So let's go. Theo, would you like to pick a category? Purpose, adoption, security is on already. So just give it a
I'll take purpose for 1,000.
Okay. See, I knew what someone was going to say that, right? Purpose for 1,000. So, huh? No, it's not like that. So Theo, can you comment on why this whole Bitcoin, cryptocurrency, and blockchain thing matters to you personally in the most abstract way possible? Why does it matter?
Of course it matters because you can make really dank memes on the internet and you can trade them, tokenize artwork and trade it on there. Now, of course, it's everyone, the permissionless peer-to-peer transactions, yada, yada, yada. You've all heard that stuff. That's definitely true. I think that, everyone knows that that's already happening and you can't stop it. So that's important. Is it personally important to me? I think it just connects a lot of things. It connect all of us here. Connects the ability for creative people to use it, economics, etc. Should I pass it, or you hand it
You can
to
pass it.
someone else?
I'm just trying to get Matthew up here.
Okay, good.
Matthew, do you want to come sit here, and I'll move this way? Do we give Theo 1,000 points for that answer?
Yeah.
Oh,
okay,
my,
which
500,
one's okay?
500. Right. Anyone else want to take a shot at that question? Anybody else brave enough to take a shot at that question? Here comes Matthew. Right, Matthew, you have a seat right there, man. And I'll move you up. The panel's growing by the minute. We've added a new block.
Yeah.
Right.
I think everybody knows why we're here. It's to provide financial freedom so babies don't have to die anymore. That's why we're really here. That'll be my 1,000-point answer. I can shed a tear.
You were doing Roger Vere's presentation about infant mortality and economic freedom.
Never. No.
He does have a slide about that, though.
But I'm tired of dropping bombs on babies.
This is on the real, though, now. You're talking seriously, right? So you are talking seriously now, because that's...
I do think economic freedom for more people around the world would reduce the power of governments and things to be able to act and use tax income for
that's
that
the serious
type
note.
of behaviour, all trolling Roger Ver aside.
Right. But on a government level, the main reason why wars are allowed to be funded is because governments can create currency. You take that away, you take away the power of war.
Yeah.
Yeah? Do you want to rebut that?
Yeah, good synopsis.
Anybody else brave enough to crack that question? Pranav?
Can I pick purpose as well?
Do you want another purpose question?
Yeah.
All right. Well, we're supposed to go in order, but that's fine. All right. Can you put your finger on why this is so special as a movement? Like, what is it? We can't seem to help ourselves. It seems to attract people of all different walks of life. Why are we all so crazy about this thing? What is it that brings us all together?
I think everyone would agree that we all appreciate transparency, and it comes from a general place of frustration and not having to see a lot of truths represented correctly in this current system, and that's kind of what we vouch for.
That's nice. So, what if you could prove what was true and what was false? That's kind of the promise of blockchain, right?
Well, it's more about facts.
That's what I mean. Objectively true.
Things are negative or positive, they should both be portrayed.
Objectively true things, right? Yeah. Like I patented that thing on this day, or I took that photo on this day. That's objectively true, thanks to IP chain or whatever it happens to be, or whatever you want to save. Any information that can be recorded and brought to consensus, so everyone agrees. Yes, that is Pranav's song, right? So that's cool. Everyone like a bit of truth? No, you don't like truth. Okay. Objective truth. Okay, fine. Right, just pass Pass along to Dominik. Dominik, do you want to pick a category, mate? Do you want purpose?
Regulation.
You want regulation and law? Okay, right.
Somebody
Let's
has
see
to.
what we've got here. This is from someone on Twitter called Titan Silver 354. Very, very serious question. When moon? No, that was actually a serious question, but you don't have to answer that. When moon? Right. So, do you believe we need these price-stable cryptocurrencies? And if so, I don't know why it's in the regulation category, but you can answer anyway if you like. Do we need these price-stable cryptocurrencies? And if so, what are the best ways to achieve it? Do we peg it to a fiat currency, or do we have a free market mechanism that balances the price?
Well, I think we all live in democracies where we believe into free market. So therefore, I think stable coins is also a very a trend word right now. What is a stable coin and what can provide that? If you say you need it backed by assets, I don't think that's necessary. What you believe is the market to believe in them. Currently, that's driven, I think, more from a technological side in things, where you say, okay, one coin is better than the other because you have, difference in how the mechanism, the protocols work. I think in the end, what really will make a difference is when you have more regulations and clear regulations, regulation that you can follow as a company. Where you can really comply with that, because that will give, well, obviously, a lot more assurance to investors, and that will make other kind of investors enter the market. And with more regulation, more transparency, you will have bigger investors. That means more actual money in the market. That will allow you also, and other kinds of transparency, because I see so many people here doing like technical analysis of microcurrencies. That doesn't really make sense to me. I got a banking background. They are much too small, these markets, to analyze them that way. So I think more regulation will make it also much more interesting for everyone to be involved. And in the end, will focus on and help us, really grow these new kinds of blockchains and currencies that we will see pop up. And I don't necessarily think that those around will be the ones that we use in 10 years from now.
Good answer, and apologies for that. It wasn't really a regulation question. Do you want to add to that? Yeah, William. Pass the mic to William for you.
So basically what he said, but much shorter. So stable coins. We've had a lot of people talk to us about stable coins, and they are trying to solve a problem. I think cryptocurrencies have three things that need to be solved before they hit when moon, to answer the question. One is technology, and there are a lot of people working. There's some amazing minds working on solving the technology issues. The other is adoption, and we're at this sort of forced dawn at the moment where you've got people who should be thinking about ways of actually using cryptocurrency for some actual purpose, instead thinking, you know what, if I buy a little bit of this or a bit of that, I can become rich. And they're a forced dawn, and they're not actually getting onto the final end state. And the reason that they're being stopped is because the price is so volatile in the short term that it actually makes sense to give it a go and gamble. And it was quite interesting. There was a talk earlier today by this guy to my right where it was about building versus speculating, and there was a few people in the room. And then there was another one around, let's say, trading. I'm not going to say which particular one it was, and the room was packed. And those people, it should have been the other way around. We need traders, and I run one of the largest exchanges in the UK, so I believe in trading, and just to be clear, but we do need to all try and work on having that the other way around. Now, the other way to do that is by free markets. Now, disclosure, we've just launched an exchange which is designed to allow institutional flows to enter the market. And the reason why we're doing that is, of course, it will, if it's successful, make us quite a lot of money. But the other reason we're doing it is because we really believe that if you get institutional flows into this market, it will allow us to actually stabilize the price in a natural market-based way. So,
will the institutions put their money in while it's still unregulated, though?
Well, they already are. They already are. We can't obviously say who our customers are, but to just put it in context, we have similar volumes to Coinbase in the UK.
Okay.
And for a long time we were number one. We're sort of vying number one, number two with them, which is fine. It's a short-term thing. but they have several million customers. We have 40,000. So that gives you an idea of the sort of the volumes that each of our customers are doing. And some of our new offerings, we are expecting to have 100 to 500 customers. The CME, which does volumes that are in excess of all stock exchanges in the world, has 40 customers. So that's where we have to get to. Those are the people who, when you have a fire hydrant of volume, it's very hard to change the price because you need hundreds of billions to change the price. At that point, it makes sense to start doing things like building viable businesses, providing services for Bitcoin. The reason why we enter this thing in the first place, that makes sense at that point when you know the best way to make money is to provide value to the world.
Mm-hmm. Sure.
Anyway, that's me.
So we've skipped a step here. So before you answer the question, could you just restate your name and where you're from? Because we didn't do the intro.
Oh yeah,
so.
I didn't do a talk here. So my name is Obi Nwosu. I'm the CEO and co-founder of Coinfloor.
Coinfloor.
And Coinfloor is a group of cryptocurrency exchanges, including the longest running exchange in the UK, one of the longest running in the world. And we focus on institutional and sophisticated investors and traders.
Cool. So William, did you want to add to the price stable token?
Sure. So I think for any cryptocurrency to be a unit of payment, you need stability.
Mm-hmm.
People need to have confidence that the prices that they are paying are going to be reasonably the same from day to day. Equally, businesses, when they're trying to price things, need to have that confidence. As long as you don't have that stability in cryptocurrencies, it's going to be very difficult for it to become a day-to-day payment system.
Mm-hmm.
People instead, they may use it as a store of value, but they won't use it for that other aspect of using it day to day. And that's a really big challenge to overcome. And it's very difficult to engineer stability. I remember back 30 years ago when Britain was in the ERM to try and provide currency stability with the rest of Europe, and that didn't work out too well when the market decided to drop the value of the pound, and the Bank of England spent vast sums trying to back it up, and ultimately the market won, and Britain had to retreat from the ERM. So it's a nice thing to aspire to, maybe through regulation. Good question. What is stability? That the price of something today in a cryptocurrency is the same in a year's time, relatively, within say plus or minus
1%.
20%. Wait. Okay. It
stays the same.
But then the question is the pound.
well.
So some examples like this.
Inflation. Yes. It needs to be going upwards. If you have deflation, then, as we've seen in places like Japan, you get into very interesting problems where people are incentivized to withhold their money rather than spend it, because the money they hold is going to be worth tomorrow, and that has an impact. But it's still...
So you can be deflationary.
Isn't Bitcoin inherently deflationary, ultimately, right?
Because you only ever have this, a certain number.
So your purchasing power increases once full issuance is there, right?
But in relation to other currencies, of course, it could be inflationary.
Mm-hmm.
But so it's a nice thing to aspire to. Regulation may be part of it. I think it's going to take more than that, and it will just take time, I think, for that kind of stability to occur. And then you've got a chance of being a day-to-day currency.
Right. I suppose the way that fiat currencies, the pound, euro, the dollar maintain their price stability is just liquidity. There's just so much volume, right? Do you want to comment on that, mate?
Oh, I just wanted to say that I think that there was one slide, traders are important too. I'm going to agree that you need to build, but traders are important. If there's no traders, the spread is so wide, it's also not viable for businesses to do anything. So you do need volume, institutional or retail, depending on what exchange. So traders are actually doing a job that needs to be done as well. So I don't think it's right for people to demonize the evil traders just because they got dumped on, basically. Because you need traders.
Pass it down.
Sorry. So, as I say, our traders are our core customers. So we know we need them, but there are, so just a bit of, maybe go into technical a little bit, there are two types of futures offering. And when it comes to FX, because at the end of the day, cryptocurrencies are currencies, you're trading from one currency to another. FX is the closest example. At the end game is it will move to futures. The vast majority of FX trading is in futures. And for various reasons, it provides better price discovery. You can have higher levels of leverage than anything else, so you can therefore drive the highest volume through it. And it also has a number of commercial use cases. Now, there are two types, and they differ based on how how settlement happens, because a future is basically two people saying, we're agreeing to buy a certain amount of cattle or cryptocurrency at some point in the future for some price. And it doesn't matter what happens in between. So what happens is first, you immediately get an island of stability. No matter what is happening to the price, between us two, we've locked in our price. So you have micro stability immediately.
Between now and the settlement date.
That's an immediate win. But at settlement, you do two things. You either say, I'm going to, at that price, look at what the current prices of the market, and we'll figure out the difference and pay it back. That's called cash settlement, and that's how BitMEX, OKX, CME, and CBOE work, the people who are most known in the space. Or the other type is actually the more common sense type, which we agreed to buy 6 cattle for £7,000, and then at the end of the settlement, you give me the 6 cattle, and I give you the £7,000.
Which is like the manufacturing use case.
That's the sort of common sense way it should work, and actually it's simpler to understand, much more difficult to implement, and that's called physical settlement. Now, both of these things actually do a couple of things. One, they help provide far more liquidity to the market. They help people to be able to settle their price. So they give benefits to the person directly, the traders directly, and they give benefits to the market as a whole. Because if you're a trader, you have a choice. I can choose to trade on an exchange where everybody else is a trader. There's no one actually doing real business. So everybody's figuring out the price by plucking finger in the air. Or I can trade on an exchange where some subset of the users are actually trying to do work. They're actually trying to provide a product and sell it, and they're trying to stabilize the price of that, and so that they can sell more and provide more value, put more people in jobs. If you're a trader, you would prefer to, just purely for your own economic interests, to trade on that exchange, because people are valuing the currency based on real fundamentals.
It's like a value
versus based on purely on guesswork. So when these things come into existence, and we've announced the first one in the world, but there will be others, and we know that 3 or 4 people are trying to work on this. It's going to be incredibly impactful to traders as well.
Cool. Have we done that question to death? Let's move on. Pick a category. You can have purpose. You can have economics, security and privacy, regulation and the law, or technology.
Sorry, repeat that, sorry.
You can have the category of technology, regulation and the law, economics, security and privacy, adoption. or
Adoption.
purpose.
Let's go
With
adoption.
Okay. So what is the definition of crypto adoption in your eyes? So we typically think of it in terms of end users, but I actually wrote this question. My personal opinion is that there are more types of adoption than that. Like I wrote the question, can't remember what my examples are. So there's user adoption, merchant adoption, that type of stuff, developer adoption. So what's your definition of crypto adoption?
My company, BCB ATM, we run the UK's largest Bitcoin ATM network at the moment, and we see end user adoption. So the average Joe. So our goal is to get the average Joe to use Bitcoin. So we have phone's gone. So our goal is to. Is this working? Can you hear me?
Yeah, you're good.
Yeah.
You're good.
Okay, so our goal is to get as many people using our machines, and we do that by placing them into local convenience stores. And by doing that, we feel like the average person can physically go out and start using Bitcoin. Because, for example, when I started using Bitcoin 2013 or so, I was skeptical about sending money to someone I didn't know across local Bitcoins or whatever it was at the time. So I searched for physical ways of obtaining it. And I came across Bitcoin ATMs and I thought it was the easiest way for anybody to get into that space and that way. And we've seen huge numbers of adoption through that. On average now we get about 5 or 6 new customers through our ATMs. We've been able to track that. The reason when we asked them why they've chosen to go to an ATM instead of going to an exchange is the fact that they can trust their local store that they've been going to. So they're a local convenience store. They know the shop owner. They trust the product. They know that that machine is going to be there for a long time because they trust. They have that trust. At the end of the day, peer-to-peer currencies, which what Bitcoin is all about trust. And we do that by through Bitcoin ATMs. So,
how many people in the room have used the Bitcoin ATM? Okay, quite a few. That's cool. It's good to know. Anybody else want to take a crack at that question about what's your definition of crypto adoption?
I think, are we on? Yeah.
Yeah.
For me, I approached the Bitcoin adoption subject about 10 years too soon with NeoMB in Cyprus. It was the first physical Bitcoin bank, essentially. We had card payment terminals. We was literally weeks away from McDonald's accepting Bitcoin transactions at the point of sale and things like that. All the cable TV companies, so like the equivalent of Sky in the UK, was all on board to accept Bitcoin as a method of payment in Cyprus in 2013, 2014. It was far too early, the wrong jurisdiction. The technology isn't really perfectly fine-tuned yet. Lightning dropping on the mainnet is absolutely brilliant. I don't know if you've not used the technology, have a play on the test net, so you're not going to lose anything. Even on there, you can see just the potential that we're going to have for like the use cases now that we've got that second layer. With regards to like user adoption, there is so many opportunities to improve like the user experience because Bitcoin is still very much in the realm of the geeks, of the people that use it, and I'm openly one of them. You go give somebody an eight number account number and then go and give them a 34 character alphanumeric string. Which one is going to be used the most? They're going to opt for the traditional bank account where they can send faster payments in the UK every single time. So there's so many opportunities where people can create wallets or services and businesses that improve that user experience, which will enable more the average Joe, your barber, your hairdresser, whoever, to actually use and accept Bitcoin. If people develop and build the systems and the infrastructure around it. And to go back to the stability issue, I totally agree. Once it takes 500 million to move the Bitcoin price 0.1%, I think that will aid mass adoption so much more. Because speaking to people over the years, it's just been a case of, it's too volatile. I can't accept payment in Bitcoin if it's going to drop through the floor tomorrow. And I do think a circular economy is probably what we want to shift that power, if we can get away with it.
That's a good one. So William was talking about, until we've got that price stability, you can't set the price in Bitcoin on the price tag. You just can't do it unless I'm earning crypto and spending crypto and there's enough volume going around the system. That
product
0.1 BTC is just going to be like...
Got product idea, LCD screen that updates the Bitcoin price on a...
That's almost like something for our country of hyperinflation.
I'm sure I've seen that before.
Right. I think I saw it. It's one around here. Spar Shop's got it on the shelf edge label. It's just little LCD screens like calculator screens. Seriously.
Sweet, we should go rob them.
Or change them all to Bitcoin prices. Probably more like it, right? Pass the mic. It's good. Go on, pass the mic.
The question is, who's affected by the fluctuation?
Who's affected by the fluctuation?
The hodler of last resort.
Yeah, it's like hot potato.
There's two aspects. There's the merchant and the consumer, the customer itself. So from
Hold the mic up a bit, mate. Hold the mic up to your mouth. Hold the mic up to your mouth.
So
Hold the mic up to your mouth.
If we wanted more market adoption, then we'd always want to look at of the interest for the customer.
The merchant, chicken and egg.
Yeah, pass the mic. It's like the talking stick.
It's the chicken and egg problem. Merchants aren't going to want to adopt and accept payment without converting to whichever fiat currency they choose, because they've got bills to pay, they've got suppliers to pay, manufacturing costs, etc. If they're going to be out of business the next day because they can't afford to pay the manufacturer, then it's a non-starter. They're not going to accept Bitcoin payments. So the approach that I've done, without shilling my new startup too much, is to basically tag on the payment processing to another core business. It doesn't affect the UX with the merchant
User experience.
Yeah, sorry. Too much engineer talk.
Real-time translation.
Yeah. So it will enable, over a period of time, the more people that can access Bitcoin through my company, they can then start to use it at those locations at the same time. It's piggybacking one on the other, so trying to find a solution to the chicken and egg problem of more people need to have cryptocurrencies to be able to use them and to obviously pump the price so we can get it so there's a lot more liquidity in the market, but then also provide them somewhere where they can accept it.
How many people in the room have heard of BitPay? Quite a few of you, right? So BitPay is great for merchants because they're like, great, it means I can accept Bitcoin as payment, right? But without the volatility, because BitPay, you can receive the payment in pounds, but the customer paid in Bitcoin. Sounds great. The problem is, all BitPay are just selling loads and loads of Bitcoin. So if everyone started using BitPay, it means they're selling tons and tons of Bitcoin every single day. That's not the solution, in my opinion.
So yeah, what you need is for people to, at least for a month or two, hold it in cryptocurrency. Because if they're holding it in the actual cryptocurrency, they will start spending it in cryptocurrency on their suppliers, and then you get to this circular economy that was just mentioned now. I mean, just one quick example of where merchants, the actual fundamental merchant for any cryptocurrency is the miner or the verifier or whatever the equivalent is in a cryptocurrency. So they're in a perfect market. Anybody can generally, unless it's Ripple, anybody can enter the market with no exceptions. No offense to Ripple, because we might list them at some point. Anyway, so, but imagine anybody can enter a market. It's a perfect market. It's a perfect market. And so their profit margins over time, ignoring December, can be quite tight. Now, they have a number of costs. They have costs of staff, and they have costs of electricity, etc. And they want to cover those costs. So they need stability. Otherwise, so they have to lock in their price one way or another.
How can they do that?
Preferably, they have, or have some sort of stability for a period of time.
Could they use futures for that?
Pardon?
Could they use futures for that?
I'm not going to comment on that.
Okay.
Because that would sound like I'm shilling, so I'm not going to comment on that.
I mean, I don't disagree with anything that anyone said, but what we can see now, what merchants are accepting Bitcoin and crypto, well, that's dark markets. So those customers and those merchants are willing to take the risk of the price stability because they need censorship resistance, and that's one of the features that Bitcoin brings us. So that has been massively, taken off in dark markets. In other markets, other underserved people, and they're willing, or they have to, in some cases, or they're willing to take the risk as far as price stability in order to do their transactions. So that is already taking place now, and that's also a big part of crypto growing.
Do you think there's who's not spoken yet? They've already spoken so far? Oh, yeah. So do you think there's like a single tipping point for adoption, or is it going to be a case of just slogging away, building momentum until we get that worldwide liquidity?
Well, obviously the main point of adoption is when we don't value our worth based on shit coins like the US dollar, the euro, and the Great
USD
British pound.
coin.
Yeah. And it's quite as simple as that, right? Am I wrong?
I hear they've only got one miner, the Federal Reserve, you know? And they mine all the coins, right?
Exactly.
Right. They've got different branches. They have got different branches. Yeah, it's regional. It's kind of like Ripple in that way. Like,
So speaking as an author and someone who is a merchant, I don't take Bitcoin as payment for my book, unfortunately.
because you give your book away, is it?
Well, I do. There is that. I give away my ebook for free.
Did you
guys.
take tips?
Yes,
You do take tips,
but
that's
not in Bitcoin.
No, in Bitcoin. Okay, fine. That was an assumption on my
The
part.
problem I've got is that certainly for buying copies of my book, all of my costs are in the real world currencies.
Right.
Like euros for printing my book and for distributing. So in order to accept Bitcoin as payment, I'm taking the risk then in terms of the fluctuation
Exactly.
in it. And that's a huge disincentive to me.
Right.
Because, you know, I'm essentially a single person business and I'm having to put food on my family's table every night. And
Yes.
that kind of risk is just really too large.
Right, and it's really those early adopters that are almost like subsidizing the space by absorbing that price.
It is when you have a currency varying by 300%.
Pass the mic. The microphone, pass it to you, right.
No, I'm just questioning, is it a risk in the first place?
Is it a risk in the first place?
Personally, no. How's it? If you're a no coiner, then it's a risk, right? You see, I personally, I think the whole approach is wrong. Our focus on the blockchain is very
Hold the mic up a
different.
bit.
It's not trading, it's not merchants, But really, what is it that you want to do? You want to do adoption, you want to do market growth, you want to make sure people are using funds. Who owns a house? Who owns a car? You can release asset or release equity from any asset. Why don't we take the same approach with Bitcoin? Where if somebody has one Bitcoin and let's say the market price is $5,000, you just work on a 1/5 scale, where you can release $1,000, put it into a smart contract, and still utilize them funds.
Mm-hmm.
And this way, you will get much quicker adoption. But nobody's thinking or taking these kind of approaches, which astonishes me. I mean, personally, we don't do what most of the speakers are working towards. But it astounds me how you can't release equity for adoption. You have a house. You don't sell your house when you go remortgage. You just go to a bank and borrow some money. The bank doesn't go and sell you bricks. The bank just locks your property.
You mean like an equity release scheme?
Absolutely.
Okay.
So why isn't somebody locking through a smart contract, one Bitcoin, regardless of what the price is, you just lend 1/5 on a 1/5 ratio?
Well, there are certain
You lend
platforms
on a-
like that, like Salt, for example.
there are
does that.
With
Fighting over
regards
the
to the whole idea of staking Bitcoin as capital against, or as principal against a loan, and borrowing against that Bitcoin, it's an old idea that has been floated around for years, regardless of whether or not you do it with a stupid smart contract on Ethereum or anywhere, or anything like that. In the real world, if you're lending money as an institution, you've got capital requirements, you've got regulatory frameworks to adhere to, and getting into the lending business isn't a cheap or quick process to do.
Again, you're misunderstanding the point. You're lending to yourself. You're not borrowing money. When you go remortgage, please. When you go remortgage your house, please. When you go remortgage your house, where's the money being released from? You're lending it yourself.
Oh,
It's your own money. No. Banking has been put in place, so you can go to bank and get some money, right? Then bank recognizes, okay, the property has an asset. We can lock the property so it can't be sold, and we can lend funds on that based on the fact that we'll lend less than the actual property market value. When you own a Bitcoin, and again, this is just my thinking. Could be completely wrong. There's experts here. I'm no expert. But if you own a Bitcoin, it's worth 5,000, 10,000, 1,000, regardless what it's worth. You're just lending yourself.
I think the difference...
Bitcoin is also a bearer instrument, so you would have to find somebody to lend you your Bitcoin.
The difference with the bank, right?
So there is a counterparty in that contract. So you'd be the lender. So you'd be with a smart contract or whichever way you're trying to approach it. If I'm giving my Bitcoin into a smart contract to borrow, say £1,000 against a £5,000 asset, but it's not I wouldn't need to borrow it if I had £1,000. I've got a Bitcoin, but where's this £1,000 coming from? Is it being magicked?
Where does it come from when you release equity from the house?
My Bitcoin is one Bitcoin. It's not £5,000. My one Bitcoin is one Bitcoin. It'll always be one Bitcoin. But the £1,000 value, that £1,000 in £20 notes needs to come from somewhere, surely.
Which, in a banking case, they create that money.
Yeah. In a banking system, they create that money.
Right. Which doesn't
in the smart contract or anywhere else in the world, that needs to come from somewhere.
I want to try and talk about something else different than futures.
Thank
you. You're effectively talking about a form of derivative where you're basically saying, but basically what you're saying is, I have one asset. It's like, just forget crypto. It's like cattle, and you're agreeing to give me effectively a certain amount of pounds for that cattle. But if the price of the cattle, what happens if the price of the cattle or the crypto goes down by 10 times? It no longer is enough to cover the original loan, and that's the problem. If it fluctuates a lot, you're still getting that from someone else, and that's the fundamental problem.
All right, let's drop that question.
That's why those ideas, which have been, as has been mentioned over the last 5, 6, 7 years in this space, have been mooted. They fail because they work if things don't fluctuate too much, but if they fluctuate too much, i.e. like in the whole of the crypto space, they stop working. And when they work, it's really catastrophic because all of a sudden, people are asking for you to pay them back, and you say, well, here's my Bitcoin, and if or let's say not Bitcoin, but here's my, for want of a better phrase, shitcoin, and it's gone down to no value, and it no longer is valuable enough to pay back that even what was 1/10 before is now 10 times its value.
Drop it. Let's move on. Drop it.
You'd have to start with.
Pass the mic down to the gentleman at the end. They've not spoken a lot, so let's have Dominik and Pranav. So you guys pick another category. Do you want technology? We've got some technology questions left, some regulation questions left, economics, security and privacy, adoption or purpose.
Technology.
Does someone whisper in your ear then?
Might as well.
All right, technology question. So this is from a guy called Rob R. on Telegram. How will dApp developers choose and utilize blockchains they build upon? Are there incentives for developers to hop from chain to chain only for the incentives that each of the things offer? Kind of like people hopping to different mobile tariffs. The examples they give are like EOS and Tezos offering funding for app developments on their networks. So back to the question, how will dApp developers choose which blockchains to build on? And will these incentives have any bearing on that?
That's a rather technical question. Does anyone else
You
want
did
to
pick
take that?
technology.
Well, they're between, I mean, if it's EOS versus Tezos or Bitcoin Cash or Bitcoin or whatever. Excuse me? We're not going to get into that. I'm trying to trigger you by saying Bitcoin Cash. So there you go. I did
So
it.
now we've got B-Core.
So there we go. Now get the face like that. Okay. Anyway, back to the question. Yeah, it comes down the incentives. Yeah, it's going to come down to funding. So you know, there are people in these projects that are they want people to build on them. Please come build on this project. You're doing a project. Come build on our project. We'll give you some of our shitcoin, or we'll give you some tokens or whatever, and you can build on that. They all are trying to do that. And of course, a lot of the incentive is financial. How much can you give? But it's also about how friendly the developer environment is and how friendly the platform is for developing stuff. Now, That being said, I'm not I'm not a developer, but I hear that, you know, that is the main thing. A lot of people they don't want to develop on ETH right now. They want to see what's up with EOS, or maybe they want to see what's up with Tezos, or maybe they just want to see what's up with who gives them the most money, and they'll just build their project on that regardless. So it really is a case-by-case basis what the people want to build, if they're okay with JavaScript, if they want something more complicated, if they want to do smart contracts. It really just depends on what it is. But I think definitely the financial incentive of just them throwing money at people doing projects is definitely part of it. So I don't know who has the biggest war chest, but I mean, if you look at how much did Tezos raise? What, 100 million, hundreds of million? That's a pretty good war chest. I guess the Bitcoin Cash war chest is pretty big too. Yeah, I know it's gone down, but everything's gone down. So there's some pretty big war chests out there to recruit development and projects on these chains. So I don't know, let's see what happens.
It's kind of a developer's market right now. There's just a gross shortage of blockchain developers in the world. So it's like, you know, just get them while you can, you know. Anybody else want to take a crack at that technology question about how dApp developers would choose which blockchains to utilize?
With regards to like dApps and things, is there actually any real world use cases where anything has actually of value beyond CryptoKitties and rare Pepes that is actually being used in the real world? Like where? Okay, making a fundamental difference to people's lives, or
yeah. Any CryptoKitty owners in the house? Yeah. Hey. Thor, that's what I'm talking about.
Or Rare Pepe or CryptoKitties. But for the amount of capital that is being expended within that space and has been expended within that space, and incentivizing developers to use a network over another one, that's partially like maybe just be partially the maximalist in me. But Bitcoin has never done an ICO or had a marketing department or required to incentivize people beyond its own network effects and like the incentives of obtaining and acquiring Bitcoin for the long-term like hodl position. It just seems like a bit of an odd position to want to incentivize people financially to go and develop there.
All right, you would rather have a, what do you call it?
I'd rather have a voluntary
meritocracy?
system where people want to go and develop and don't need to be incentivized
Because
on my
it's the best
network.
platform, right?
Yeah, because it's
I
the
see.
best platform, it's the most solid, sound, technologically sound, securest platform where there's no like wallets accidentally deleted and stuff.
Gotcha.
Yeah.
Yeah, I suppose so.
Just a reminder, every
Pass the mic, pass the mic, pass the mic, pass the mic, pass the mic down.
And you get a commission on every Pepe Cash transaction, don't you, Theo?
No, there's no smart contract. Anyway. No, it's
Yeah,
all good.
it was like I was saying at the end of your presentation, Theo, about these edge cases will bootstrap it. And it might be an extreme thing, but it'll come to the mainstream in stages, right?
So, I mean, if you've, look, okay, well, maybe you say CryptoKitties didn't change anything fundamentally, but it fundamentally tested the ability of the Ethereum network to take on a massive app. How did it work? It just worked. I don't know. I didn't develop it. I'm just saying that, you know, what I'm saying is. Great. Okay, great. I think it's great if we can do Rare Pepe or CryptoKitties. Let's get that right. Make sure that works. And then you can connect the smart contract to your self-driving car. But before that, I'm not touching it.
Would you say it's a good idea then to go and throw, say, however many, $150 million into a DAO on that network?
On Ethereum?
Yeah.
I'm not giving any investment. As CryptoKitties got 12 million from Fred Wilson and some other dudes. I don't know how they're going to make money, but somebody's investing in that. So.
Right. Sure.
So that is like using CryptoKitties as a testing platform for that network. It just seems crazy that so much capital that could be used elsewhere within the ecosystem is just literally being thrown at projects that have got grand promises on, say, the Ethereum network or any of these other, even networks that haven't been built yet. People are throwing tens and hundreds of millions of dollars at these organizations and companies. It just seems it's actually mind-blowingly crazy from me maybe being a little bit closed-minded about it.
It might seem like that on the face of it, right? It might seem like that on the face of it because you're talking about crypto.
People are free to be dumb.
No, it's not crazy. It might seem crazy on the face of it, but as CryptoKitties like scales, it's the value is in the spin-offs. So they're going to invent technologies that will make CryptoKitties work that other projects will use. So there is no loss of investment in that regard. You know what I mean? You know what I mean? And also, take Theo's point about the consequences of CryptoKitties blowing up isn't as bad as the DAO, right? That's a catastrophic problem. It did, which you shouldn't have done. This is Theo's point, though. They should have built CryptoKitties first before they tried sticking 150 million into an untested smart contract.
Yeah, next
let's
question.
move on. Okay.
Next category.
Next category.
Whose turn is it?
Let's have my man here. So we still have some technology questions, regulation and the law, economics, security and privacy, adoption or purpose.
Adoption?
Adoption.
Yeah.
Adoption again. Let's see here. Oh, there's loads in here. Do you want one of I've written, or do you want a user question from the internet?
Any. No worries, yeah.
All right.
Bitcoin.
You've only got 500 points, you. All right. Let's see here. What's the one thing you wish you could communicate to each person who encounters crypto for the first time? Well, my personal answer to this is for the person to know their outcome, meaning get clear on why they're doing it and whatever that might be. So what's the one thing you'd communicate to people coming to crypto for the first time?
If I would say that 5 years ago, I'd be like, buy it to make money, but now I've become to understand it a lot more. I'd say buy it for like what's been mentioned before, like overcoming the banking cartel and such like. So I think it really does take a lot of power away, and from them, and it's taking back the power to us. So
you'd make them aware that that's what this technology can do for the world,
for sure,
which many people may not appreciate.
Yeah, absolutely.
Cool. I'd like to hear from some of the other guys on this one. What one thing would you communicate to people who encounter crypto for the first time? What's the one thing you would want to make sure they know before they journey on?
No refunds. Hold your private
refunds.
If you lose all your money, it's not my fault.
The first law of investment is what I'd remind people of. Never invest more than you can afford to lose.
Fair enough.
Don't buy it thinking you're going to make money.
Short and sweet.
Use a Bitcoin ATM.
I'm not going to top that one. Cattle, get your memes right. I would say, I'm sort of forgetting the last year and remembering, I think we're heading into a period which is going to be more like 2014. I would say, no, I think it's going to happen, which is good. But anyway, what I would say is just buy a very small amount, and that's it. Because once you buy, you'll go down the bunny hole, you're going to want to educate yourself, all of these things will happen. And if you don't have it, if you don't own it yourself, you don't fully understand what it is to have monetary sovereignty. So that's all you need to do. Buy a small amount, £5, £2, whatever it is, or get it from a friend and start from there.
In a week's time, you will not know how to fix Bitcoin. It's the one thing, the mistake that a lot of newbies make, and it's even been memed, I believe, is, hey, I'm new to Bitcoin, I'm here to fix it. It's just avoid that and just educate yourself.
Cool.
Yeah, I totally agree. Do your homework and beware of scammers. It's astonishing how many people try to rip you off in an anonymous market.
Cool.
I would say like it's kind of considering cryptocurrencies as an alternative lifestyle. So if someone says, try soy milk, I would try to analyze that it's ethical. It's better for sort of animal husbandry, whatever, and see its utilities and accessibility. And we need to assess those factors to see how relevant that is to me. And I think the same approach should be applied to just cryptocurrencies as well. It's dependent on the individual person instead of just a trend. And at the end of the day, we're trying to have people make their own decisions and not essentially be tyrants in that way. Like every day, national currencies are enforced. We're not trying to do that. It's just about a choice. It's an option. And it would be best to have utilities for the currency that encourage people to use it. But at the end of the day, it's the individual's choice.
Cool. I like the point you keep making, Danny, about Bitcoin's broken. All right, we're working on it. The internet doesn't really work properly, and we're still scaling it and building it. So does anybody in the room want to ask a question of our panel while you've got them all on the spot? I'm assuming you have, because I've stood up. Otherwise, I'm going to go back to the questions. There we go. This gentleman right here. Anybody else? Stick your hand in the air. Wave it up. Oh, my goodness, loads. I'll go this way.
I'll preface this question with, I know that this is not financial advice, but can the panel give their own opinion? Where will Bitcoin be in 12 months' time?
In my wallet. Where will Bitcoin be in 12 months' time?
I covered this earlier. Somebody asked me this after my talk. If I knew, I would bet on it and I would make a lot of money. But I don't, and I'm not crazy enough to go and change my Twitter name to like BTC Danny 30K or anything like that. So if you're worried about where it's going to be in a year, you're probably overexposed. Well, it's pretty much an answer that most sane people give.
It might not necessarily be a price question. So.
I think in a year's time, Bitcoin will still be here. And that's pretty much all we can say beyond that point. And also, obviously we have our personal views of what's going to happen. And there's no way I'm going to tell you my personal views running an exchange, unfortunately. But because people will then take investment advice based on that. It's cyclical, so you can look historically. Yourself personally, but as the advice said, educate yourself, look, and you make your own determination. I think that is the wrong question, though, to think about. As I said, I think we should be more focused on how we can use this system to actually improve the world and revolutionize the transfer of value in the way that the internet revolutionized the transfer of information. That's what we should be focusing on.
At least the price of one Bentley, everybody update their Twitter profile to say #WinBentley.
We go for another question?
So if I'm operating as a merchant, for example, I want to accept Bitcoin. Obviously, it's easy enough to accept Bitcoin directly without Lightning. But as the law stands, as I understand in Europe, somebody can return the goods. So I sell something to them for whatever, £500 or point whatever, Bitcoin. They can return the goods, say, a week later or 2 weeks later, based on price fluctuations. How would you mitigate that?
Your transaction
Yeah, so no, your transaction will be, from a law point of view, for Europe and UK, will be denominated in pounds. So Bitcoin was the mechanism for transfer, but the value was still in the local currency, so you're sort of covered there.
Okay, so you just make sure you've got the pounds to cover it, and then...
And you would have shown at the point of retail the price in the pounds, so you're just saying this was the mechanism for transfer?
Great, thank you.
You should be okay then. If you don't, you won't be.
Kind of a good question. Who's next? Come on, don't back out now. There's at least two hands up here. Yeah, there we go.
I'm interested to hear what each of you guys think or view as being the biggest threat to cryptocurrency.
Biggest threat to cryptocurrencies.
I mean, so 5-6 years ago, everything was a threat. And people were concerned about many things. I won't go into all of them. But what we've seen especially over the last year or two, most of the biggest boogeymen have actually materialized. So if Bitcoin or cryptocurrency forked, it was dead, and it actually thrived. If regulation came in hard, or if it was banned in China, it would be dead. It's thrived. So at this stage, and that's why I think it's quite a bearish market at the moment, because we're actually starting to realize that all of the major threats, in fact, all threats, are actually something we need to run towards, not run away from, because we just now need to just keep knocking them down and show that none of them are actually going to stop this. This is a fundamentally new and viable form of decentralized money, monetary transfer system, and decentralized form of governance. And that's incredibly impactful. And once you realize that, and once you see what's happening, you realize there are no major threats. They could affect the timeline from 2 years to 10 years, but they're not going to stop something that's fundamentally better for the world coming into being.
Round of applause for that answer. That was a good one.
Listening to the discussion about the problems that we're having, kind of trying to integrate with the existing system, the thing that came to me was we've got the stability coin problems, we've got like the integration into the meat space, as I call it. But when I think about it, I think, well, what's Bitcoin's unique advantage? It's like it's digital, it exists in a digital space. And so what really inspired me about Theo's talk was actually kind of digital assets, like collectibles, art that is entertainment and has kind of no value, but we give it value. And if people want that, they have to come here. And I'm a massive YouTube fan. I'm not into Twitter or gaming so much, but these are intangible things that have no real world input, that if you get Bitcoin, you have to pay your suppliers, well, and maybe electricity and servers and stuff. But it seems to me, why are we trying to get into the meat space rather than really build an even richer crypto environment with more crypto kitties and Pepes and stuff like that? Should we not really focus on making this a special space that people want to be, an even more exciting place with more digital things?
I think it's a very good point. It wasn't like when the internet first came along, we ran to all the retailers and said, you've got to set up an online store. We just kind of ran around that and did Amazon and eBay and all the, you know what I mean? And then later on, the retail stores have done that. So what do you guys think to that?
I think, well, I do agree that we should look to expand the digital economy and use the strengths of Bitcoin, which is literally censorship resistance, value transfer, as a main aspect, that and a store of value over a period of time. But we tend to fall into our little bubbles, really. Bitcoin as an ecosystem and extended out to other cryptocurrencies is a $200 billion industry, let's say, based on market cap, as insignificant as that figure may be. On the grand scheme of things, 200 billion is nothing. The world is such a big place, and there's 7.4 billion people, and there's not 7.4 billion people that are ready and need what Bitcoin enables in the world. There's people that are cut off from financial aid money because it's lost through corruption and things before it reaches them. There's other problems like that can be solved without getting too preachery. That Bitcoin can actually work towards solving issues in those spaces, in the meat space, as you call it. And there's just so many opportunities, and we shouldn't just focus all of our energy on the digital realm where a lot of us geeks tend to survive and thrive. We should look to step out and use the great technology that Satoshi gave us to actually impact the meat space and the rest of the world.
Anybody else want to crack that one? No? Okay. Yes, no, yes, no. Theo wants to crack.
I just want to say, you need both. You know, you need both. You can't, you know, so CryptoKitties or Pepe or whatever is great, but you need both, otherwise it doesn't work. You need futures, you need ATMs, and what else do we need? We need music, Bentleys.
IP protection.
So, building on your point, always need books. The challenge with creating digital artifacts is, of course, essentially there is an unlimited supply of them. So the challenges of competing in the digital space are in some ways way more than in the physical space, because there is no constraint on supply. So, speaking as someone who does do digital goods, my biggest challenge is being able to stand out from that. And I choose to do that by giving my product away, so that I'm getting my name out there and not imposing a cost on anyone to access that.
If only there was a way of producing digital scarcity. Absolutely.
And yep, blockchain and Bitcoin provide an example of that. Should I have put a limited supply on my books, for example? Yeah, maybe. Right now, I'd like to get it out to as many people as possible to get my name out.
Is there a pre-sale?
But the thing I would say now, this is a fantastic panel. We're an hour through this. You know, it's a great panel here, but I can't help notice that 50% of the population isn't represented on this panel. And
What my gender is.
I assumed I would like to offer my seat to one of the people from that 50% to take over and to act in the second half of this. So please, someone come and take the seat. Come and take the seat.
Brianna, come up.
There we go.
Hi. Oh, Lord. Thank you.
Okay. So my question. So I tend to. I tend to take the view with cryptocurrency that it's we're not even in like the 1% in terms of adoption. We're so far beyond not even close to the 0.1% in terms of adoption, even though it's very well publicised, media and all the rest of it. I personally feel that there's a massive shortage of sort of like a cataclysmic catalyst that would amplify cryptocurrencies into the mainstream. And you can talk about Coinbase and some of the other bigger companies that have helped to do some of those things. CryptoKitties being a very lame game, but a very good example of what's helped it do that. Do you guys have a view on any particular niche or any particular industry or any particular way that a catalyst would come along and help push cryptocurrencies into the mainstream, and not necessarily from a pricing and like financial point of view, but more from an application point of view?
Porn. Who said that?
That was a really long-winded question, but one of the big things that I kind of talk about a lot from a design perspective is design, and how the lack of design in the crypto and blockchain space is probably one of the huge things that's holding it back from more mainstream adoption. And it may seem like kind of a trivial thing, especially for people in tech and a lot of people on more technical backgrounds, but when you mention Coinbase and things like that, well, why is Coinbase so successful? Why is Coinbase so mainstream? It's because it's a fun little simple app that, was the first one to kind of launch and make it more accessible. So when you think back to 2013, 2014, that was the first time I tried to actually invest in Bitcoin. And it took me like days of research to try and figure out the convoluted processes to go throughout the process and actually achieve buying one, back when they were like nothing. So since then, of course, there's tons of exchanges. You log on. It takes a few days to get verified and all that. And even still, the process is still kind of convoluted for the average person. So I think the more that we can simplify that process, the more we can make it user-friendly and simple and easy and fast, and still be secured on a secure platform, the more people will kind of buy into it and trust it. Because when you tell somebody they have to write down a 30-digit number on a scrap of paper and not lose it because that's what's going to hold your money, it kind of almost kind of counteracts the whole aspect of this is a high-tech digital currency that's going to change the world. But if I lose my piece of paper, then suddenly it's worthless. So I think really finessing that in ways that things like Coinbase have done is definitely going to go beyond that 1% kind of adoption and make more layman's sense of the whole convoluted process. So.
I would just agree with that in terms of it comes down to trust. So when it starts to impact people in their everyday lives, when it comes to, as much as obviously we want it decentralized and we want to move away from the government having control over certain things, when you see the government using it for things like identification and things like healthcare and all of that, it becomes much easier to trust. And when you see a lot of people kind of trading, and I'm not putting down traders at all, but when you see that people are kind of losing money, everyone knows someone who has a horror story. And when you move away from that and get towards the idea of everyone having a little bit or dipping their toes in and actually not having any financial losses, just getting on board with it and knowing someone that you can go to and ask about it, that's obviously just the way that mass adoption works. So yeah, it's just that trust.
Excellent.
My question is really regarding, this is for the non-Bitcoin maximalists. So I just want to know, what do you think the potential is for a MySpace, Facebook moment, for another digital currency to come along and be the most dominant currency? Whether it's DAG or other technologies that produce something more scalable and something to take over.
So basically, when flippening.
I know this wasn't aimed at like self-proclaimed maximalists. With anything that's going to flippen or flappen or anything to replace Bitcoin as the number one. Oops, killed it. It needs to overtake Bitcoin's network effect. The best developers arguably work on Bitcoin. It's where the most capital is. A lot of other, I'm open to the fact that we could get another white paper from Satoshi 2.0 tomorrow that literally solves every problem in the world and cures cancer. It would probably overtake Bitcoin eventually, but it wouldn't happen straight away because Bitcoin has this tremendous network effect. And you have to remember that nothing else in this space would really exist if it wasn't for Bitcoin. And when the Bitcoin price dives, everything around it seems to dive quicker because people jump ship back into the stable Bitcoin before deciding what to do from there. So whilst it is possible, right now it seems unlikely that there's going to be anything, because Ethereum really doesn't scale well at all. And even syncing a node now is ridiculously hard. That Jameson Lopp has commented on loads. So yeah, I don't really see it, but it is possible, and my eyes are open to it. And if Bitcoin is flawed, it has problems. So yeah, if there's something that come along, it could happen. Although right now, unlikely. And it's certainly not Bcash.
Actually, you can compare Bitcoin to gold. Gold is heavy. You can't use it as a denomination. There's a good reason why we use paper money now. I think at some point we will shift to something that's simply more technologically advanced. But right now it's like a standard, a gold standard.
The Bitcoin standard by Safedine Ammous. He's out now on Amazon.
So, I mean, as an exchange, we were probably the Bitcoin maximalist exchange. And so while everybody else was listing various different cryptocurrencies, we just listed going from Bitcoin to Bitcoin Cash last year. And we're still analyzing Ethereum, so that's how conservative we are. But that being said, if we think about what was invented, we think about what cryptocurrencies are, one of the big key aspects of them is decentralization. And decentralize all the things. And so you have decentralized apps, your decentralized governments, and so on and so forth. I think we have to be wary of them thinking there's going to be a centralized currency. If you've just worked out a way of making a decentralized currency, then you should expect there to be more than one of those decentralized currencies as an ongoing thing. And I think a potential Achilles heel is to believe that there's going to be one currency to rule them all, because that's back to centralized thinking. One thing I can say about Bitcoin, and we've seen it with the Bitcoin and Bitcoin Cash split, was that you're seeing two different ideologies here. The people who are very focused on, you can say that the wealthy element, but a lot of them are very business focused, have moved over to Bitcoin Cash or Bcash or whatever you want to call it. And then a lot of the people who are highly technical have stayed with Bitcoin Core. And that's interesting because I think that weakens each community and both lose out from that. And Ethereum, with their split from a year earlier, you still saw a large number of people who are very commercially focused and a large number of people who are very technically focused stay within the same community. And other cryptocurrencies that can maintain all the different cohorts that make a community may have an advantage over Bitcoin. That could allow it to lose its number one spot. That being said, I still think the likelihood is very low. We still think Bitcoin has by far the highest chance, but we shouldn't sort of rest on our laurels and assume that because we're number one and because we're first, that it will remain that way forever.
So I actually think part of that is kind of thinking in the now. We get asked this question a lot. What's the price of Bitcoin going to be next year? Is Bitcoin going to be the leader? And I think that's kind of approaching it in the wrong way, because I think I lost my mic? No? Oh, okay. So I think the right way to look at it is now we're seeing a kind of saturation of market in all these plethora of different coins and tokens and opportunities. And I think what you'll start to see is more segmentation. And when you're talking about cohorts, what it makes me think of is you'll have a group that's tackling more value, things like Bitcoin, digital currency, transactions, things that are better for the short term, things that are better for the long term, things that are better for commodities, things that are better for buying and selling and shopping, and you're basically going to see things like, I mean, even platforms. When you mention what's Facebook, I was thinking of social media, and the platform Steemit, if you haven't heard it, is a really powerful platform based on blockchain, where it's basically an online social media community. And so what I think you're starting to see already is all these different niches happening, and it's less about who's the ringleader and more about like separating them by industry and by niche development and projects that they're working on. And of course, we're in a testing bed right now where, blockchain is not maybe the go-to technology for social media or for XYZ. So we know there's a lot of potential, but I think in the same discussion of cryptocurrencies, it's a testing bed right now to see what is actually a great use case for blockchain technology. And so I don't think it's like comparing every single one to Bitcoin, because hundreds of these coins aren't even the same. They're not even trying to be in that space. They're trying to tackle something else. So I think the important thing is to not compare everything to Bitcoin per se, but to really look at, in the long run, identifying these pockets and these industries that blockchain is trying to support and develop into a kind of next level generation of technology. So identifying maybe a ringleader in each niche industry or projects that are trying to be tackled to utilize the tech.
Excellent. Right, let's go off there. So round of applause for the panel, if you will, please.